Did you know that every year small businesses and freelancers find themselves grappling with very complicated business concepts that could make or break their business? Today, we bring to you the most challenging business concept and how you can go around it. We dive into taxation, presumptive tax. Presumptive tax has affected small businesses, and I've seen recently many businesses have been closed in cities, other urban centers, and even in the villages. Today, allow us dive into the concept of presumptive tax, how it affects the businesses, how it affects the government, how to go around it, how much to pay and how much not to pay. Much as it's your right to do business, it's also the government's duty to levy taxes on those businesses. So today, we want to dive into taxation. I would like to remind you, if you're an entrepreneur, if you're a business person, if you're an upcoming business person, or in the future you intend to go into the business world, this video is a must watch for you. Before we go into that, please don't forget to subscribe to our channel. Please hit the subscribe button and also the notifications bell. Subscribing is evidence that what we are doing is impacting your life. If the topic is interesting, please let us know in the comment section as we move forward. For that matter, let's go on. Presumptive tax is a tax levied on businesses with little or no capacity to keep proper books of accounts. Big businesses are under obligation to hire professional accountants. Professional accountants have a duty, according to the Accountants Act, to provide financial statements every at the end of the year or even quarterly or biannually. Those financial statements are used by the Uganda Revenue Authority to judge which kind of tax this organization is supposed to pay and how much it is supposed to pay based on those financial statements. But these small businesses like yours and mine do not have that capacity to hire an accountant. But what they do is they get a small book where you can put, today I've spent, today I've earned. I've sold a bar of soap at 7,000. I've used this, I've used that. That's to say the income and expenditure of the business. But that's not enough, because what Uganda Revenue Authority wants from you is how much profits do you make. Basically speaking, it may not be easy to determine how much profits you make because you make very small transactions per day, and it may be very difficult for you to determine how much you've got as profit from every single item. So what URA does, it looks at where the business is, which kind of business you do, how much do you sell per day. That's turnover. But that turnover is calculated on an annual basis. So the government bases on your annual turnover to determine how much money it should charge you as presumptive tax. Big corporations like public limited companies and other companies which have the capacity to hire accountants are exempt from presumptive tax, just like how small businesses are exempt from corporation tax. So what do you need to do? If you do not keep proper records, URA will charge presumptive tax on your business based on, one, the location of the business. Two, they assess your business based on other similar businesses. They'll assess you based on another business in the same location that does the same kind of business like you do, but it keeps the records. So that's point number one. Keep your records. Today, we wanted to dive just a little bit into presumptive tax, because I've seen very many businesses failing, Recently, very many businesses have been closed in big cities, in small towns, and even those village town councils.